Hey everybody, welcome to the Crypto Sane channel. We're going to be talking about cryptos and taxes today. A lot of questions remain. Many people don't know exactly how to keep track of these trades and how it's going to get taxed. So I gathered some information. It's not everything, but figured maybe this could help you talk to your accountant or your CPA and see if this is going to be a little bit easier for calculating how much taxes you have to pay down the line. So trading cryptocurrency to fiat currency like the US dollar is a taxable event. So for example, let's say you have a good amount of Bitcoin and you sell one Bitcoin. That's about $16,000 now. So you have to calculate how much you bought that Bitcoin for and how much you sold it for, and then that will give you the amount of profits, and then you have to pay capital gains on those profits. When you trade a cryptocurrency to another cryptocurrency, that's also a taxable event. And so the simplest way to do this is just to keep track of the fair market value in USD of all the coins involved at the time of the trade. So whether it's using your BTC to buy Ripple, for example, make sure the BTC that you're using, you can track when you bought it and then how much the value is then as opposed to how much it is now then, and you're converting it to Ripple. So you're making a gain from BTC when you first purchased it, which was probably lower, and now it's higher. So that's a gain in their mind because it's crypto to crypto, right? This is crypto to crypto. So now on the flip side, you want to sell your Ripple back to BTC. If your Ripple price is higher than what you bought it at, that's another taxable event. But if you do it backwards, where you're losing, you could also, jot down the loss for it too. Okay, it works both ways. And when you're using cryptocurrencies to buy goods and services, that's also a taxable event. It says you have to calculate the fair market value in US dollar at the time of the trade. You may also end up owing some sales tax. Now, I'm not exactly sure how that works, but it just says you may. So just keep that in mind, okay? So the reason why cryptos are taxed when you buy and sell or trade, it's because the IRS treats cryptos as a property and not currency. So there's capital gains for short-term trades and long-term trades. Short-term trades are under a year and long-term trades are over a year. So when you make a short-term gain, they are calculated as ordinary income. So let's say you made like $10,000 in short-term gains and within one calendar year, you would have to add it to your total income that you make and see what you made for that year. And if you fall into this first bracket, you would wind up paying only 10% of your gains. If it's income that you made up to $37,950, then it's 15%, and so on and so forth. So the more you make with capital, with cryptos, the capital gain bracket is going to go higher based on short-term trades, okay? And it's broken down by people who are single, people who are married and filing jointly. If you're a head of the household, I'm not sure what that means. Ask your CPA. And then married, filing separately. So there's different ways to file as well. So there's different rules for each and every person depending on how you file your taxes. All right, so just to cover again, buying cryptocurrency with US dollars, that's not a taxable event. As long as you're using US dollars to buy any cryptocurrency, that is not a taxable event. But you don't realize any gains until you trade, use, or sell your crypto. If you hold longer than a year, you can realize long-term capital gains, which are about half the rate of the short-term gains. So let's take a look at the long-term capital gains tax bracket here. So it looks something like this. You know what? I'm going to make this a little bigger so you guys could see. All right. Hold on. So let's say you held on to Bitcoin for quite some time, and it's been over a year since you did anything with Bitcoin, and you sold, you finally sold some Bitcoin, and let's say you made $10,000 in gains with your Bitcoin. So you would fall somewhere in the zero. You don't have to pay any capital gains if you only make $38,700 for the entire year. If you make more than $38,700 all the way up to $426,700, then you're only paying 15% capital gains. So hodling and holding the coins for a long time and then selling is much better in terms of capital gains taxes. It's a lot lower, and I don't know if you would fall into the 0% because most people make more than that, I think. So it'll probably be around in the 15% bracket, which isn't all that bad, right? So I know that a lot of the anti-crypto people are saying once you get taxed, you're gonna be sorry, but no, it's not that bad. It's 15% if it's a long-term gain. So how do you track all of your trades when you buy and sell all these coins? One way to do it is just bring up an Excel file and create something similar to this. If you want this file, I'll leave a link down below, and you guys can use this if you want. I don't know if this is something that would cover everything, but you could always add to it. Let's say you bought, today is January 7th, so you bought some Bitcoin. You bought one whole Bitcoin for about $16,000, and you bought it in US dollars, so there's no capital gains over there, right? There's nothing there. So I also put the fees, like Coinbase charge 4%, so I put the fee here just so that you can write that off as an expense, because it is an investment. So now you have one whole Bitcoin at $16,000, and right away, let's say you wanted to buy Ethereum, right? And you bought one whole Ethereum coin, and we're just gonna keep the price simple and say that it's $1,200 for one Ethereum coin. So you want the quantity, you want the price in US dollars, and you also want to make a note of it of what you use to buy Ethereum. In this case, I'm saying Bitcoin. We're using Bitcoin to buy Ethereum, okay? So one Ethereum coin is going to cost about 0.07125 amount of Bitcoin. And then the value here is not supposed to be $85. Let me see. I'll probably put this 1 times the price of Ethereum should be that. So it should be $1,200, right? And the fee, let's just say we bought it on Bittrex. I think Bittrex is 0.25%. So the fee is only $3, all right? So is there a taxable event here in this case? No, because the USD price for Bitcoin is exactly the same, because you kind of just bought it, and then you bought the Bitcoin, and you just took that Bitcoin and bought Ethereum right away. So there's really no value difference, right? But let's say you waited a couple of weeks and you wanted to buy Ethereum a few weeks after, right? So you want one Ethereum coin, and let's say the price of Ethereum never changed and it's still $1,200, but Bitcoin went up to $20,000. So there's a difference here, right? 16,000 to 20,000. So my question is that a capital gains of $4,000? Like, I don't know, or at least the rate. So we will have to find out about that. We don't know for sure, but I'm thinking that there is. Okay, so 1 times 1,200 here. I'm just fixing these values are wrong. All right, so bring that down like this, and then this is the same over here. Okay, and then let's say instead that Ethereum went up from 1,200 to 1,500, right? and then now you're buying it with your Bitcoin that's worth $20,000. Is there a taxable event? I don't know. So what we're gonna do is just make sure that you write all the fees down, however much it costs. Well, this should not be 125. It should be $1,500, and this is 0.25, right? So this is how it's going to look. And every transaction you do, whether it's on Bittrex or Coinbase or whatever, just keep track of all of these things on a spreadsheet, so that when you tell your accountant to do your taxes and stuff, you'll have everything here, and let him figure it out or her figure it out, because we don't know, right? Like the CPA is probably going to know better down the line. We'll find out more information about how this works. So that's basically it. I hope this was helpful. You know, we don't know yet, right? So we're going to find out more about how to calculate these crypto trades. One notable thing, though, I will say, is that the IRS doesn't really care about people who make like less than $20,000, okay, with the cryptos. They're looking at people who are more interested, you know, they're more interested in people who make more than $20,000 a year in cryptos. Now, having said that, does that mean you're exempt from not paying taxes if you make less than $20,000? No, you still have to technically pay. But if you're making just a minimal amount or whatever, you know, like just a tad bit here and there, I don't even know if it's worth reporting, right? So, but it's up to you what you got to do. I know there are a lot of people on YouTube complaining and saying, I'm not paying my taxes on cryptos, blah, blah, blah. But if you want to be on the safe side, it's just something you should at least do, right, when you do your trades, and just keep everything in like a you know, on an Excel spreadsheet. Now, if there's a coin that comes out that does all this for you, right, put all this transaction, do your taxes on a coin on a blockchain, now that would be something interesting, right? It'll do all these calculations for you without worrying about it. That would be an amazing coin. All right, so well, thanks for watching. I hope the video helped, and if you have any comments, questions, just leave them down below, and I will be putting my Steem account link down below too, to summarize this more in like a written format. So if you want to check that out too and give it some thumbs up on my Steemit, that would be very helpful. So if you're new to the channel, hit the subscribe button. If you found the video helpful, please hit the like button, and I'll speak to you guys later.